Hi guys, let's continue our discussion on the audit phases of the external audit. So in the previous two lectures, we have covered the first two phases, that is the audit engagement and the risk assessment and planning. So in the third phase, we basically do the entire audit, which is performance of the audit procedures and gathering of the audit evidence. So in this phase, it's actually very detailed explanation is needed if you are doing the CPA exam, but since this is a CMA exam, detailed explanation is not expected. So I'll just cover the overview of that. So audit evidence, we already covered about this. So, oh God. Audit evidence. So the auditor has to make sure that they are gathering sufficient in terms of quantity and appropriate, which talks about the quality of the audit evidence, right? Quantity of audit evidence that is gathered and quality of the audit evidence that is gathered. So the auditor should gather sufficient and appropriate audit evidence. So how do we gather the audit evidences? By conducting audit procedures. So understand this audit procedures, there are so many detailed aspects relating to that which are outside the scope of CMA syllabus, but just for you to easily have an idea about that, I'm covering this, not really relevant for CMA examination as such. So when you talk about audit procedures, the first phase comes from something called as test of controls. So the first step that the auditor does is test how the internal control systems are working. So here you will talk about the efficiency and effectiveness of the internal controls. So if the internal controls are efficient and effective, then the controls are good. If they are not efficient or effective, then that is bad internal controls. So depending upon the internal controls, the auditor will then determine how much audit procedures he need to perform. Okay. So evidence is gathered. So before you even go into the evidences part, just a second. Sorry, yeah. Before we even go into the evidence part, we need to do something. See, you know the test of controls are done. That means basically the auditor is verifying the internal control system of the company. Then before he starts going and gathering the evidences, he need to do something to identify which are the key areas in the financial statements. Pay attention now. Sir, let's say you know that the control systems are weak. That means you have to gather more audit evidence. If the control systems are strong, that means you can do more sampling. So you identified the test of controls and you got the idea about how much audit you are supposed to do, how much evidence you are supposed to gather. Then, which are the critical areas? You can't go and do the audit of all the items, P&L, balance sheet, incomes, expenses, assets, liabilities, current, non-current, all that stuff. You need to know your picky areas. How does the auditor pick those areas? So for that, we do something called as substantive audit procedures. So substantive means gathering the evidences in short. So in this, so first what we do is we do something called as analytical procedures. Sir, what are analytical procedures? Analytical means numbers. So you first look at all the numbers in the P&L. Let's say last year versus current year. So are there any unreasonable changes in the numbers in the financial statements? Like for example, sales increased by 5%. All the expenses increased by 5% except for let's say marketing. All the other expenses increased by 3 to 10%, somewhere between 5 to 10%, whatever it is. Marketing budget or marketing expenses have increased by 70%. Last year $1 million, this year $1.7 million. So immediately there is a red flag for the auditor. Okay, see, there is this numbers that you calculated, the percentage growth. All the numbers grew by 5 to 10%, but this one number grew by 75% suddenly. That means something is going there. It could be correct. I'm not saying it is wrong, but it could be that is calling for attention of the auditor, right? So the auditor first does the analytical procedures, all your ratio calculations and percentage growth, all those calculations, and he will identify the areas which require more attention, special attention. Then he will go for something called as test of details. Test of details means what? These are the areas where the auditor tests the actual transactions, gather the vouchers, verify them, and make sure everything is matching with the books of accounts. So this is called as the entire summary of audit procedures. What is that? First step is auditor will do a test of controls to understand the control system of the company, if that is weak or strong. Depending on that, he would then determine the volume of the audit evidence that he need to gather. Then he will do substantive audit process. Substantive means gathering the evidences basically. So to start that, first he will do an analytical procedure, which is basically telling you which areas should be focused on. Then after that, once you know the key areas, then you will do the test of details. See, risk assessment procedures, test of control, substantive procedures, other audit procedures. So again, within substantive procedures, you would do analytical procedures and test of details. Okay. Risk assessment is already we discussed inherent risk. Auditor will do an understanding of the entity and all that stuff. So that is already communicated, discussed in the lectures. So I hope you got the picture about what the auditor does to gather the evidences. So first is test of controls. Then based on that, substantive procedures will be determined. First you do a test of analytical procedures to identify the key areas or critical areas. Then do the test of details, gathering vouchers, verifications and all that stuff. So you get audit evidence through all this, but don't jump into conclusion immediately. You have one more step to do. Before you close out your audit procedures, you need to talk to the management, the board of directors, and get a representation letter from them. So what is this representation letter? See, at the conclusion of the audit, after you have gathered all your audit evidences, you have to obtain a management letter, a representation from the management. What is that? The auditor prepares the text of the representation letter, which is then printed on the client letterhead and signed by the auditor. This is the last piece of evidence which is obtained by the auditor and should address all financial statements and periods covered by the report, even if current management was not present during all such periods. So basically they are trying to tell you, let's say the board of directors, the financial year is Jan 1st through December 31st. So what happened is till September, the CEO was Mr. X. In September, X resigned and Y got appointed as the CEO. Now September, October, November and December, Y is the CEO. Are you paying attention? Jan through September, X is the CEO. October through December, Y is the CEO. Now, who should sign the management representation letter? Whoever is serving on the board at the time of audit, they have to sign it. Now, Y cannot say that, sir, I was only there for 3 months. I don't know about what happened in the previous 9 months. No. Okay. So the current management, even if they were not present at that time, still they have to sign on the management representation letter. The external auditors require management to prepare a representation letter because it confirms the oral and written representations made by the management, indicates and documents the continuing appropriateness of those representations, reduce the possibility of misunderstanding concerning matters that are subject of the representation. So in short, whatever the management has given you throughout your course of audit, they might have given you vouchers, invoices, payrolls, bank statements, fixed deposit certificates, asset invoices. They might have given you confirmation letters, email communications, so many things as an evidence. Now at the end, before you conclude the audit evidence, you take a letter from them stating that, yes, we have provided this set of evidences for the audit, and we declare that those evidences that are submitted to the auditors, the documentary proofs that are submitted to the auditors are true and fair and are actually authentic in nature. There is no fraud or any kind of concealment in that. So we have provided best possible information in that, and all that generic terminology would be there. So basically you are getting an additional proof mark, extra letter, one more additional letter you are getting from the management stating that whatever they have given you are valid, true, proper documents. Okay. So that is the third phase where you do perform your audit process and obtain the audit evidences. Then the last 2 steps, forming the conclusions and communicating and reporting it. So I'll continue this lecture for the forming the conclusion part because that's very small. Communication and reporting would take forever because that is where the entire discussion is there in that. So I'll do that as a separate lecture. So now forming conclusions. What is that, sir? We first got engaged and appointed as the auditor. Then we identified and assessed the risks involved in the business, audit risk, that inherent risk, control risk, detection risk. We identified that. Then we performed risk assessment procedures and audit procedures, test of controls, substantive procedures, test of analytical procedures, and test of details. We performed. We gathered all the evidences. We took the management letter. What is left? You form the conclusion based on all your work. So you say that financial statements are either free from material misstatements or not free from material misstatements. So you need to now conclude your audit. You need to form the conclusion. So what will be there in that? At the end of the field work, the auditor should form conclusions based on the procedures that are performed and evidences that are obtained. The auditor's evaluation of audit results should include evaluation of the following. What all should we include while forming the conclusion? 1. The results of the tests that are performed during the overall review of the financial statement. Test of controls, test of details, substantive, analytical, all that procedures. What are your results of the tests that you did? Internal control. Suppose you did control risk test. So control risk is high, control risk is low. Inherent risk is high, inherent risk is low. So that should be those are the results of the tests that should be documented and considered at the time of forming the conclusion. Next, misstatements that are found during the audit, including uncorrected mistakes, means what are the total level of mistakes that you identified. Let's say you observed 100 mistakes. In that, how many were not corrected by the directors? Let's say 90 corrected, 10 are not corrected. For the 10 items, there is a disagreement between the auditor and the board of directors. Auditor is saying something, board of directors are following a different method. They both are not coming to a conclusion. So those are uncorrected misstatements. The qualitative aspects of the company's accounting practice, whether they are following proper quality of accounting or not. And I should also say here, qualitative practices means how consistent they are with the accounting policies, whether they are following all the accounting guidelines or not, whether their valuation technique is appropriate. Did they hire an external consultant if they don't have the expertise or knowledge required? All that stuff would be included in quality. Okay. Next, conditions identified during the audit that relates to fraud or the risk of fraud. So during your audit, did you come across any situations that are indicating that company there is some fraud happening inside the company? If yes, that means it is a red flag for you. You have to perform additional procedures to make sure no such fraud, to make sure that if at all a fraud happened, that is identified by the auditor. Okay. So risk of fraud should be considered. Then presentation of the financial statements, whether all the disclosures are properly made or not, whether they are prepared as per the AFRF or not, all that stuff. Sufficiency and appropriateness of the audit evidence obtained. At the end, before you form a conclusion, you have to understand, did I gather sufficient evidence? If not, you should perform more audit procedures and gather more evidence. Without having sufficient and appropriate audit evidence, you cannot form a conclusion, you cannot form an opinion on the financial statements, right? So those are your last steps to be done before you give a final audit report. All right. So those are your phase 3 and phase 4. So in the next lecture, we are going to talk about the final phase of external audit, which is regarding the communication and reporting. So I'll see you soon in the next lecture, most probably the final lecture of E1.4, I guess, unless I decide to split this into 2 lectures. I don't think I'd be doing that, but anyways, yeah. So that would be the last lecture for E1.4, and then we'll start with E1.5. All right. So keep smiling. Take care. Bye-bye.